All right. Well, we are in a bloodbath. So now that the elephant is out of the room, we can kind of dive into what this video is going to be about. So clearly we're in this bloodbath, and I want to touch on the bit of news, if you're not aware yet, of why this probably happened. And then I want to talk a little bit about valuations, because if you're one of those people who bought in maybe a long time ago, or even you bought in maybe in like December towards the highs, and you're really worried, you're like, maybe I'm going to pack my bags and jump out of this ship. You know, crypto's not for me, too crazy. This market volatility was too nuts. Let me give you a piece of advice, or not even piece of advice, but kind of my 2 cents on that situation when looking at valuations of each individual crypto against each other, and how you can use that to win and kind of profit in a scenario like this. And that comes back to using profit trailer and PT feeder. I'm not saying that you have to do that. You can do it using day trading or long-term buying and holding. This is a really great opportunity for us because, you know, for many reasons. We'll get into that in a bit. I want to talk about the OTC money. We talked about that in the futures contracts in yesterday's video. I left a couple things out, how the actual, the big whales are actually buying their Bitcoin. I want to talk about that, how that can affect, new money, how that can actually affect the market cap as a whole. I've talked about market cap in previous videos time and time again, and just under the assumption that pretty much everybody understood what the market cap really represented. Problem is, that's really not the case. $258 billion as a market cap does not mean that there was an influx of $258 billion. This is just simply a valuation of the market as a whole. It does not mean that $258 billion was put into crypto. And the same is true when the market cap drops to 200 billion. That does not mean that $58 billion left the market to go buy their Lambos and private jets. It's different. We're going to talk about that a little bit. And I'm going to go over kind of an order book example of how we can represent this in more of a visual sense. So let's get into the news. Bitcoin tumbles 8% after Japan watchdog orders exchanges to beef up practices against money laundering. So as us in the United States all went to sleep, the rest of the world was kind of waking up. Japan in general, they launched this big bit of news. And basically the agency, the FSA, I believe, gave the same order to 5 other exchanges, finding weaknesses in their controls against money laundering. So more or less, this is very self-explanatory. Something to keep in mind, markets definitely overreact. It looks like we're seeing a bit of a bounce down here on most of these coins. Bitcoin in general, we touched 5,900 maybe an hour or so ago, and hopefully we're finding this bottom, and we're finding where the markets, hopefully we stabilize. But basically, in order to maximize our efforts towards building a suitable service and improving the issues identified, we have temporarily suspended account creation for new customers of our own volition. So basically, there's no more new customers coming into these Japanese exchanges for the time being. That's not good news. It means that no new capital can inflow via these new account creations. It's definitely not good news for the markets in general, but to me, that's short term. It's good news in the long term. It says in the long term, let me actually find, okay. So it says in the long term, it builds a better ecosystem and makes sure this is a legitimate asset class. This is part of making sure exchanges are up to snuff. And I totally agree with that. It also goes on to say in the short run, Kelly pointed out, it reduces the flow of new capital to the largest exchange and the largest market for Bitcoin trading. Bitcoin trading in Japanese yen makes up more than 60% of the digital currency's daily volume. And that is probably why we saw such a drastic decrease in price. And you basically saw a bloodbath all over the place today. So, kind of to be expected, markets tend to overreact. This isn't really terrible news. It's not like Japan is outlawing crypto. It's not like these exchanges are being shut down for good. It's pretty much just precautionary security measures, so that way this becomes a more legitimate asset class, and that's good news to me. So what I'm going to do next is get into the people who may be wanting to pack their bags and jump out of crypto altogether. Let me give you a bit of insight just from my own kind of what I'm doing with myself and where I bought in, because I bought in some Bitcoin pre $6,000 levels, and then I bought in a lot of Bitcoin way after the $6,000 mark. And how can you use the Bitcoin that you bought maybe say at the $10,000 range to your advantage right now? And one of the ways we can do that is compare Bitcoin to these other cryptos, and if you're using Profit Trailer, you're definitely familiar with this because you're trading, generally Bitcoin pairs or Ethereum pairs, or maybe USDT pairs. But for the purpose of this video, we're going to use Bitcoin, because that is generally the on-ramp to most of these altcoins, and how we can judge their valuations based on previous price history from their all-time highs. So if we look from Bitcoin's all-time high to right now, it's probably even a little bit better situation. That was at 69%. So let's go down to where we're at right now. So yeah, about 69% or so. We'll round up to 70%. So from Bitcoin's all-time highs, we've dropped 70%. So if we look at these other cryptos, this is Ripple. Ripple from its all-time high has dropped 85%. So what that means is Ripple has dropped 15% more off of its all-time highs than Bitcoin has. So keep that in mind. NEO is the same situation, 83% decrease from all-time highs. Cardano, 90% from all-time highs. Dash is negative 85%. And then Omiza goes pretty close, negative 71%. So this one's only dropped about 2% further than Bitcoin has. But how do we use this to our advantage? A lot of people will say, I'll probably get the trolls in the comments saying, oh, well, these didn't hit their all-time highs at the same point in time. Yes, that is true. But judging based on previous results, can these coins, if they have good technology, if they have, things haven't changed as much as people like to think they have in this bearish climate, right? And if anything, you've seen a lot of good news come out of this bearish climate, from the SEC ruling that Bitcoin and Ethereum are not securities to, these technologies, the Lightning Network. Maybe some people say it's a smokescreen, but a lot of these technologies are rapidly advancing even in this bear market. Even the CEO of Coinbase says, if you've been involved in these bearish trends in the past, if you've been in crypto a while, you grow to love these bearish markets because you can focus as a business owner, or if you're maybe a founder of one of these cryptocurrencies, you can focus on your technology, and really work under the radar, kind of preparing yourself for the next market cycle. And this is how we can use these percentage drops to our advantage. What is the whole point of trading these altcoins is to make a little bit of money. And so how can you use that to your advantage if you bought in Bitcoin at maybe at $10,000? Well, Bitcoin dropped less than say Ripple did, from its all-time highs. And so what that means is you can actually get into Ripple today. You can buy more Ripple with your Bitcoin today than you could have back at Bitcoin's all-time high, or at Ripple's all-time high, if that makes sense. So what this means is you're getting more of a bang for your buck on these altcoins, even in this extreme bearish climate. And obviously you have to do your own research, find the coins that you think have the best technology, the best teams behind them, and hopefully they can retest their all-time highs during the next market cycle, and ideally bust right through them and make new all-time highs. But this is good news. This is the silver lining to where we're at when using Profit Trailer and setting up your day trading portfolios, is you're actually getting more bang for your buck than you were during the bull market. And so that is why a lot of traders really live for these bear markets, because there's a lot of people making a ton of money in this market, or maybe not making a ton of money right now today, but during the next market cycle, they'll have made a money hand over fist because they are accumulating at a better rate than they were during this bull run. So that's kind of the evaluations. I want to talk a little bit about what I went over yesterday in the futures contract kind of video that I made, and the OTC markets. So basically, how are big whales and maybe even institutional money? Everybody's been talking, where is the money? We never saw it come in. Well, that's kind of the point. A lot of these big traders will, or these big whales will buy OTC. They'll buy 1,000 Bitcoins, but they're not going to take that order to an exchange. Like this is the order book for Bitstamp, for example. You're not going to see 1,000 Bitcoins for sale on Bitstamp. And the reason, a big whale wouldn't bring their $1,000 order to Bitstamp is because there's something called slippage, and they can cost themselves a ton more money by putting in an order for 1,000 Bitcoins on an open exchange. So basically they'll drive that price up themselves, and they'll end up costing themselves more money. So obviously it's pretty simple, self-explanatory, but so what they're doing is they're going offline. They're kind of going like, imagine it like Craigslist. You post an ad, you say, I want to buy 10,000 Bitcoins for this price. Somebody hits you up and says, okay, deal. They send you the Bitcoins, you give them the cash. None of that transaction is ever reflected in the market cap. None of that transaction is ever reflected on an order book. So that is the difference. It's all done in cash. And so a lot of people are saying, okay, well, a lot of the big whales have gotten in already. So this is bad news for crypto. So to me, it seems like this is good news. There were a couple articles that got released recently that said these OTC markets, they're drying up. The Bitcoin is drying up on these OTC markets, which means that there's not a lot of sellers anymore. Whether or not this is completely true or not is very hard to tell. You'd have to do your own research on that, but just bear with this kind of hypothetical situation. If these OTC markets are drying up, these sales are drying up, what that means is these big whales are not able to purchase these large amounts of Bitcoin any longer on these OTC markets. So what they'll do is they'll either raise their price so people will sell it to them, or they'll move their orders to the order books. And a lot of the speculation in the articles that I was reading are saying they're pretty surprised that this hasn't happened already, and maybe it's slowly starting to happen. But what that means is that'll drive this price up when these big guys can't get their money offline anymore and they have to bring it to a real exchange. What did I just talk about? If you want to buy 10,000 Bitcoins, there's not that many Bitcoins available. There's roughly 17 million Bitcoins. There's like 12 million millionaires in the United States alone. There's just not enough Bitcoins to go around. And so what inevitably that does, it's supply and demand. When there's more demand, the price goes up. And so that's something that's like another bit of good news that I wanted to talk about regarding the OTC markets. The next thing I want to cover real briefly is the market cap. So when these people start to come to these exchanges and put in their orders for, 1,000 Bitcoin, 10,000 Bitcoin, whatever, this is really important because the market cap doesn't reflect dollar for dollar. It actually is much more exponential. So how does that work? Basically, JP Morgan did a study and they said that roughly, I believe it was 6 billion. I could be wrong. It could have been 60 billion. I think it was actually 6 billion. 6 billion in US dollars has been injected into the crypto markets to equal roughly the market cap that we have today. So what that means is this is all based on what somebody is willing to pay for it. That doesn't mean that there's actually $258 billion that has been put into crypto. And no, a lot of people are going to say, does that mean that it's all overvalued? And simply no, that's not the case. I don't believe that means that it's all overvalued and smoke and mirrors. It has all to do with what people are willing to pay for it. So one way you can look at that is go to the order book. And what I did was I exported these as an Excel sheet. And if you were, so this is the order book, the exact same thing that you're looking at here. In layman's terms, what this is you can add up these bids and the asks. And it's pretty self-explanatory. I'll dig into it. Just kind of bear with me. So imagine that you are one of those OTC guys coming in and you're looking at this order book right here. So you have the bids and you have the asks. The bids is simply what somebody is willing to pay for that Bitcoin. And the ask is what somebody is willing to sell that Bitcoin for. And then your value on the right column here in each sort of chart is the value based on how much you're willing to buy or sell, right? So it's very simple. I brought this into an Excel so I could show you the addition of the order book itself. So imagine, this is obviously what somebody's willing to sell for it. So the lowest, or this top one, is the lowest price that somebody is willing to sell their Bitcoin for. The bottom of the order book right here is the highest somebody is willing to sell their Bitcoin for. So it ranges from 61.53 to 61.93. So the difference in this price versus this price is 0.73%. Now, obviously, I'm probably going to get some trolls in the comments again and say this isn't necessarily, like, this won't work. But imagine you're one of those OTC guys and you have a ton of money. This entire column is the amount of Bitcoin that is being sold on each individual level, right? So if you add up this entire order book, you're going to get $1,062,584. So if you're one of those big guys who wants to buy a ton of Bitcoin, then you literally need $1 million, roughly $1.6 million. You can come in, buy this entire order book, and you can single-handedly increase the price of Bitcoin by 0.73%. And granted, this won't increase the price of Bitcoin 0.73% across the entire market because there are hundreds and hundreds of exchanges. But this is just to get the point across that if you did come in with $1 million and you rose the price by 0.73%, or even if you rose it by a smaller percentage than that, maybe 0.4%, that would, at 0.73%, that would increase the market cap by roughly $768 million. So $1 million coming into crypto or into Bitcoin raises the market cap that we were talking about earlier by $768 million. So it's literally a 768 time multiple. That's not the case with everything. It really depends on the order book. It depends on all of the above. But that's just to give you guys an idea of how a small amount of money can really affect the market in a big way. Because if you think about it, and this really is representative of only $6 billion coming into the market, or that was initially put into the markets. You're just going to see some really crazy market valuations in the future during our next market cycle. And that's kind of the last bit of, like, silver lining to all of this is small money. Now that we have, like I was saying earlier, we have the regulations are kind of slowly falling into place. A lot of people are saying, the big money can start to kind of come in. There's a lot less worry for them. And the nice thing is, when you're looking at these order books, a small amount of money does a lot of good. And then on the flip side, it can do a lot of bad. If you wanted to sell your Bitcoin or you wanted to buy a ton of Bitcoin at X dollars, you can drop the price really drastically as well. So it works both ways, but just wanted to drive that point home that this does not mean when the market cap rises by 100 million or 100 billion, whatever it is, doesn't necessarily mean that 100 billion came into the market. It could be a lot less. And that's really important. So let's see. Let's get into the last kind of bit of news. We have this Mt. Gox thing. This is actually really, really interesting. So today, the Mt. Gox is entering a civil rehabilitation in major win for creditors. This was updated on today. So basically, this has been looming over the crypto markets. Same with Tether. For the past, months and months and months. This was, if you don't know, Mt. Gox was the first Bitcoin exchange. They got hacked for hundreds of millions of dollars. And basically they've been just dumping a lot of their Bitcoins onto the market to make everybody whole again, or somewhat whole again. But apparently today it says that they are not going to be selling on the open exchanges any longer. So at least for the time being. So a proposal for fulfilling the rehabilitation request will then be submitted to the court by February 14th, 2019. So yeah, you guys can give this article a read, but that's kind of some good news. And then I for some reason don't have the tweet up by Charles Hoskinson. And I believe Charlie Lee is tweeting about this. So is the CEO of Coinbase. They're saying that, everybody is overreacting to all this bearish sentiment. And there really isn't a lot of reason for the valuations to be as low as they are right now. And yes, they could go lower. Yeah, we could go down to the $4,000 or $5,000 mark, and before we start seeing, the true accumulation phase. But these big names who are very well connected in the industry are saying and quoting that we're going to see an influx of trillions of dollars into the markets. Now, we were talking about $1 million rising the Bitcoin market cap to 768. We're talking 1 million can raise the market cap by 768 million. So if you're having trillions of dollars come in, like Hoskinson is saying, the Wall Street moguls coming in, imagine what that can do for the market cap as well. So, maybe it's pie in the sky thinking, but I really don't think we're going to see these red days for a whole lot longer. It could last, another day. It could last another few months, but that's not a whole lot longer in the grand scheme of things. Especially if you come from traditional markets and, and you understand that investing, especially if you're a long-term investor, is much more longer term than what most people in crypto are hoping to gain. They're hoping to just get their Lambo in a week, and that's just not the case. So, with that said, if you enjoyed the video, please hit the thumbs up. It really helps the video out. Also, leave a comment. That also helps the video get a little more exposure. YouTube has been kind of weird lately, getting less views. So I appreciate you helping me out with that. If you want more information on stuff like this, I'm constantly in the Discord answering questions along with our awesome moderators in there. So I appreciate all that. The Discord is popping off. So until next time, take it easy, everybody.